for the second day running for the week, we saw a bit of profit taking. I mean, the first 1 or 2 weeks of January have been quite exciting, and we've seen quite most of the stocks rallying up. But this week we have seen quite a bit of profit taking, and despite foreign investor participation still remaining a key component during the session, there was a sense that the locals were actually doing quite a bit of the profit taking.
All right, now let's talk about the dominant stock, Safaricom. We're always discussing this particular stock, but some research coming out of Sterling Bank shows that 50% of the NSE's turnover last year was attributed to Safaricom, and there are now concerns that there may be oversupply of the stock on the market, and that may be the reason why the price is a bit sluggish, below 5 shillings, not quite getting to that resistance level. And there's talk that maybe something should be done about institutional investors mopping up the excess stock. What's your view?
I think if you look at the shareholder composition, it's changed quite significantly since Safaricom listed. And in fact, what we've seen is that institutional investors have mopped up the stock. And particularly in terms of the growth, we've seen also particularly the foreign investors accumulating the stock more significantly. And the local retail investors selling off of the stock. So I think in terms of the supply, it's still substantial. I mean, the company is also a big company as well. So you also have to take cognizance of that. But I don't see that as a supply issue. I think mostly investors are concerned with regards to the price competition that set in during the course of last year. And we've seen most investors quite reluctant to take significant positions in the stock, despite that being a large component of the market. So if you are putting a smaller proportion of a big company, you know, which in the market as part of your portfolio, then that's obviously a concern. So the price sort of tends to take a hit. All
right, Eric, let's talk about some of the gainers for today's session. We've seen Standard Group Limited gaining about 4%. It's really very much a services industry story here. We're seeing some of the stocks within the media sector, within the services sector performing well. What do you attribute that to?
Yeah, the media segment, there's Standard, there's Nation Media, and there's Scan Group, are all expected to do quite well in the course of this year. Advertising revenues are up quite significantly, and you know, so is activity related to advertising, and so that's going to really spur the sector on that front. And you know, you have the other services companies such as tourism, which have really been buoyed by the improved economy. So the performance of the economy has really been driving these sectors up.
All right, other gainers have been companies like CFC gaining 2.42% on the value of its shares. Also, some of the cement makers making gains, and experts are saying it's a direct correlation with the situation unfolding in the Sudan. If a prospective new country comes to the fore, these are some of the countries that are going to benefit. What's your view?
Yes, I mean, but I think we also need to look at the issue of capacity. So not all the cement companies are going to benefit from Sudan coming into fruition or additional construction activity being spurred in the country, because they actually need to put up additional capacity to be able to meet that supply. But that said, I think that's generally a valid statement, and some of the companies which are putting up additional capacity and hopefully at the right location, probably closer to Sudan, maybe in Uganda, we've seen Bamburi putting up increasing capacity at its subsidiary there. So depending on the company, yes.
Okay, and then in terms of the losers today, some of the agricultural product marketers haven't been doing particularly well. UNGA, I'm talking about here. Gas producers such as BOC, carb acid also under a bit of pressure, and they're losing somewhere in the region of 9% to 5%. Is that something for investors to be concerned about?
Well, I think it's from company to company. You have to be selective. If you look at the results we had today of Rea Vipingo, earnings were down. Rea Vipingo is a sisal producer, and sisal prices haven't held up quite well. You've mentioned Unga Group. Unga Group basically sells sort of to the agricultural sector, so it has human and animal feeds. And you know, I think it's been recovering, but obviously if you look at the problem with regards to drought, it tends to affect Unga quite significantly, because it means they'd have to source their raw materials from outside the country, and that increases their costs. And then if you look at the industrial gas producers, so you have BOC and Kabacid. I think Kabacid has had a challenge. Last year the earnings weren't very strong, and I think investors saw that as sort of a weakening in earnings. But still, it did manage to produce quite solid earnings. So I think it's a mixed bag.
Okay, and a final question to you here, and this is issues around demutualization, regulation, and just how the bourse will be governed this year. There are reports of further amendments to the Capital Markets Act regarding the licenses of the security exchanges, liabilities, who manages the exchange, stockbrokers moving out, those kinds of issues that have been very much in the public for over the last year or so. How is the restructuring going to aid the NSE in terms of better management, better performance going forward?
Obviously, from a regulator point of view, they'll probably be able to manage the players a lot better, because with the independence of the stock exchange, it means they can actually license players and probably be able to have stronger ability to govern, to manage players. And that, on the wake of challenges in which the sector had a couple of years ago, I think it's very important, and it's a milestone that the regulator has been looking to have done. And so obviously, from a regulatory point of view, that's quite positive. And also, for the stock exchange as an independent company, they'll probably be looking to list it when the market is right. And obviously, that will help existing players to actually realize value from their investments. So I think from those two perspectives, it's quite positive for the sector.